5 seconds to the open. Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, and welcome to you all around the world. Welcome to Follow the Money Radio. Oh, it's so great to be back with you. I always look forward to these podcasts. Thank you for tuning in. We have a lot to talk about today, but especially on one topic. Today we're going to be talking about precious metals, not just gold. Gold obviously is locked in a big uptrend. It has been for some time. And not just silver, because silver's also in an uptrend, though it's been a little aggravating lately because it's had a tough time kind of breaking out along with gold. Silver tends to lag gold a little bit. When you look on the charts, historically speaking, we were just talking to our members about this. Many of our members and students here at followthemoney.com, we do a weekly coaching call, private group coaching call for all of our gold and platinum members. And I was talking to them about the historical charts on gold and silver. And typically what you'll see is that gold will, run, and then silver will also run, but sometimes it lags gold. But whenever silver finally takes off, man, can it be a raging uptrend? Can it be a raging bull market? We haven't seen that quite yet from silver in this latest run, but certainly gold and silver are on the move. But we're also going to talk about palladium and platinum, two other metals that, many precious metals investors maybe don't spend a lot of time thinking about, but we certainly focused on them here. They have been big winners. Recently, platinum has broken out and done pretty well, but palladium, have you seen the chart of palladium? What an amazing chart that is. We called an uptrend several years ago for our members. We issue new uptrend alerts on commodities and currencies and global markets, ETFs, different types of, asset classes out there. And we called an uptrend on palladium a few years ago, several years ago, in fact. And it's just remained intact. I mean, palladium now is blasted off to nearly $2,400. And it's just simply astonishing due to the supply-demand imbalance. It's really been a positive. Palladium has just had positive fundamentals now for some time, and it's been benefiting. So today, we're going to be joined by our well-known precious metals expert and advisor, Tom Cloud. For those of you who've been with Follow the Money Radio for some time, you've been a listener for some time, you know that he is someone who has been following the precious metals market and advising clients, not just here in the United States, but around the world for 44 years, more than 40 years. So he's seen a lot. And I always love to hear Tom's perspective on the gold and silver, palladium and platinum markets, not just because of the fact that he's been doing it for 44 years, but also because he talks to so many different people in this space. So he talks to not just customers who are wanting to buy, customers who are having questions about their current holdings, but also to wholesalers. He talks to many different people in the industry on a regular basis. And so it gives him a very nice vantage point to talk on this topic. So in just a few minutes, we're going to bring on Tom Cloud and move into that topic of precious metals. And before we do, I just want to make a couple of comments. First of all, thank you to all of you who were able to come out to the Money Show in Orlando. I was just out there in the Orlando Money Show. We had a great time. I talked about cannabis stocks and also talked about 3X ETFs. Really interesting topics. We met a lot of great people out there. We had a really great time. And for those of you who came out to see us, I really appreciate getting a chance to meet you and see you. It was really a good time. We're going to be at the Money Show in Las Vegas in May, so we'll keep you posted on that. If you're out in the Vegas area or if that's a place that you're kind of near, then we'll be coming out there. I think it's May 11th through the 13th. We'll have more details about that, how you can get a free seat to that Money Show if you want to be there. Also, did you see President Trump put out a $4.8, I can barely say it, trillion dollar spending plan on Monday? Wow, that's incredible. $4.8 trillion in 1 year they're going to spend of your money, of your taxpayer money. Well, I guess that makes total sense considering that the government plans on bringing in about $3.8 trillion in revenues. Actually, it doesn't make sense, does it? Because that would be a $1 trillion deficit. Oh, yeah, that's exactly what the United States of America is running right now, $1 trillion deficits. That might explain why things like gold and silver are in uptrends right now, right? Because people sense that this economy, even though we hear constantly about the low unemployment, we hear about how it's the best economy since the time of, Adam and Eve. We always hear about these things about how great it is. But when you dig down deep, you really look at the numbers and you see that $23 trillion national debt, and you understand that all of this economic activity is occurring with artificially low interest rates. Man, I mean, you just do the math, you run this thing out a few years, and you start to figure out this is not going to end well. I mean, just not at all. But that doesn't stop the gravy train from rolling on. In fact, we continue to see the stock market raging higher, the NASDAQ running towards 10,000. We're going to see a NASDAQ 10,000 possibly, and that's going to be quite mind-blowing. The S&P 500 also blasting off to new all-time highs. And so it's really been quite a run for the stock market. And also, what else is hot in 2020? Well, cryptocurrencies suddenly out of the gate. At the beginning of 2020, we saw Bitcoin take off from, I think it was trading like about $7,000 at the beginning of the year. And it rallied up to where it is now, above $10,000 this week. A little bit of that run came after Federal Reserve Chairman Jerome Powell testified on Capitol Hill this week and talked about the fact that digital currencies were not going away and that the Fed was digging down deep. Right? We've talked about this before, that China is planning on unveiling its own digital version of its yuan currency. And they're planning on using that in the One Belt, One Road initiative countries, right? So many countries now are going to be able to use this. So they automatically have kind of a captive audience here that's going to allow them to scale the use of this digital yuan, which I think the United States is way behind on. And that's exactly what some congressmen as well were worried about. We don't have time to play some of those clips. We might on an upcoming show, though. I do want to dive into cryptocurrencies a little deper, maybe on a future show. We've talked about them extensively over the years. We've been long Bitcoin now since 2013, long Ripple since that same time. We also alerted our members through our weekly newsletter. We put out something called the Robinson Report every weekend. At the beginning of the year, I told all of our members that I was buying a brand new cryptocurrency. Well, it was brand new to me. It was a new addition to our portfolio called Chainlink. We added Chainlink at around $1.96. 6 weeks later, by the way, we've seen since we added that coin, it's up to, I think the last time I checked it was $4.18. So it's more than doubled in 6 weeks. This is kind of a indication of what's happening right now in 2020 with cryptocurrencies. Now, will Bitcoin hold 10,000 throughout the year? Well, we're moving into the halvening. So the halvening is coming up in May. And in May, when that halvening occurs, it's going to be an interesting thing. This is something that many cryptocurrency enthusiasts have been watching for some time. And we typically see the prices of a cryptocurrency will move ahead of its halvening. Litecoin did the same thing, sometimes even afterwards. But so cryptocurrency's on the move, no doubt about it, really moving fast, and lots of stocks moving higher. It's all about the trend, right? Paying attention to the trend, avoiding those downtrends, staying in the uptrends, and kind of watching what's happening on the charts. I tell you what, it really does make a difference when you understand trends. So today, as I mentioned, we have our good friend Tom Cloud. I'm going to bring him on here in just a second. We're going to talk about gold and silver. Gold, by the way, the gold-silver ratio is sitting at 90 to 1. Isn't that crazy? For those of you who follow that number, basically what that means is that 90 ounces of silver are required to purchase 1 ounce of gold. Now, historically, that number has been closer to 50 to 1. Other times it's been closer to 70 to 1. And even in times past, it was much, much lower. So we don't know really where the ultimate mean is going to be. But right now, at 90 to 1, silver is pretty depressed as compared, or relatively low compared to the price of gold. Gold, of course, rising because it's insurance. And you need insurance whenever you have $23 trillion in national debt and trillion-dollar deficits as far as the eye can see. I mean, you just need a little bit of portfolio insurance in a case like that, don't you? And that explains it. We also see palladium, which we'll talk to Tom Cloud about, as I mentioned, is just on a raging bull market. But Tom is a little concerned about the current state of the palladium market, and he's going to explain why in this upcoming interview. And he's very bullish on platinum. He thinks that we're going to see kind of a move away from palladium and into platinum, and that's very, very common. In fact, we've seen that through the last several decades, where industrial players will switch back and forth from palladium and platinum based upon their price, catalytic converters and things like that they're used for. So that'll be an interesting discussion. In fact, let's not belabor any more time. Let's just dive right in and move into our interesting discussion with precious metals advisor and expert, Tom Cloud. All right, well, joining us on the line again, our good friend Tom Cloud. He is a precious metals advisor. He's been helping clients all around the world understand precious metals, gold, silver, palladium, and platinum, and the role that they can play in their own investment portfolio. Tom, it's really great to talk to you here in 2020. What a year we're already heading into.
It's great to be back on, Jerry. It's just, it just seems like it's going so fast, and coming into a election cycle that's great for gold and silver, and then to look at the last year, the growth, and then to see, the budget this week, and we'll talk about that a little later, but it's just incredible, the demand right now for gold and silver, and gold just looks like it's going to be money sometime sooner than later. Really, some currency is going to come out and tie it to gold, and it's going to be a number, it's going to have a jump up to a number people won't believe. So we need to be thinking about that.
Undoubtedly. Let's go through each of the metals briefly, but you bring up the election year. Let's talk about that first, because we were recently doing some analysis of data, just going back and taking a look at the gold chart and seeing when gold really begins to surge. And what we noticed was that in election years, 2000 and we go back right before the 2012 election, right back before the 2016 election, and now here as we head into the 2020 election, when times of uncertainty rise, you certainly begin to see gold play that role that it plays so well, and that is that uncertainty that drives people to say, I don't know what's going to happen. In that case, I want to hedge. In this case, gold plays that hedge, and 2020 is turning out to be somewhat of a uncertain year. I mean, certainly Donald Trump is the nominee, or of course the nominee for the Republican side as we head into the 2020 election, but it's kind of a toss-up right now with the Democrats. And whenever you have an election that looks uncertain, gold typically tends to rise. And I know you certainly could look back through your data and find that same thing. So I think 2020 is probably going to be one of the better years for gold. What say you?
Well, I say the same thing. I mean, last year was mind-boggling, getting 19.2% up for gold last year. I was predicting 10 or 12. I thought it'd be a great year, but certainly not the great. But there's so much demand out there. The central banks, under all these new world reporting laws, that you can only use AAA-rated bonds issued by a government, commercial paper, treasury bills, or gold. If you're a bank and you repossess real estate or stocks, you can't even put them on your balance sheet at 100% because of the risk. Gold's become the non-risk investment in the world because of the quantities that central banks are buying. So I'll look for 3 years in a row, the past 2 years, this year and into next year, is seeing gold going to new all-time high. I don't see that here it is at 1570, and we're only talking about getting to 1870 roughly. So we've got $300 to go, which is about 20%. So I think we see new all-time highs in gold in the next 24 to 36 months. And then I want to make one other comment on the election, and we'll go to another metal. Yesterday I was blown away. A client of mine had sent me an article showing Trump was asking for a $4.8 trillion budget. $4.8 trillion budget. Now, when Bush Jr. Came in his last 3 years, 8 years for Obama, and 1 year for Trump, the budget's gone from 2.4 to 4.8 trillion just to run the country. But here's the eye-opener in the article. In 1980, 40 years ago, Jimmy Carter was voted out of office. He was printing money like it was going out of style, and he put out on the table the biggest budget in the history of the world at $500 billion. 40 years later, it's 9.5 times. And Jerry, you and I both know that paper money is going to fail. And all it takes is a slight turn in beliefs. And we're going to see that in the not too distant future, maybe 4 years, maybe 8 years, maybe 2 years. I'm not predicting what's going to do, but people are going to realize they're going to wake up one day and realize everything they have is a piece of paper. They've got to have a hedge in something real, and gold is the number one thing for that.
You know what's amazing, Tom, is that that $4.8 trillion spending plan that Trump has proposed comes with a lot of assumptions. First of all, it comes with an assumption. When you look at the actual budget summary and you go at the summary tables, you go out 10 years, they expect that interest rates will not rise. They expect that interest rates will remain artificially low. So their assumptions, of course, are incorrect, because we know that interest rates are artificially low now, but we know that cannot continue forever. But then also on top of that $4.8 trillion spending plan assumes around, I think I want to say $3.8 trillion in income. So it's going to end up being another $1 trillion deficit. Here we used to think that Jimmy Carter or President Obama were big spenders. We haven't seen the era of big government spending like we have in 2020, and it only promises to get worse. And that's good for gold. That's great for gold.
Yeah, it's great for gold. It's great for gold.
It's amazing. You know, I'm looking at a chart of gold right now, Tom, and 2019, as you mentioned, was a banner year. I'm looking at specifically the technicals of the chart. Gold kind of calmed down for a little bit from its big raging uptrend in August over the summertime, and then into the fall. We kind of moved into this sideways, kind of a bearish channel almost that appears on the daily chart. But then we broke out of that at the end of December, and we've been back on the move, and gold is really uptrending here. I know many guys, like one of the greatest traders in the world, Paul Tudor Jones, was asked not too long ago, what was his favorite asset class for the next several years, and he just quite frankly said physical gold. He doesn't see anything beating physical gold over the next several years because of these deficits. And we've gotten into this place, Tom, where there's a lot of complacency. People feel like, well, there's Republicans in power, and so they're good for business, they're good for the economy, so certainly they couldn't screw things up. But you just pointed out that we're running $1 trillion deficit almost every single year now. Talk about screwing things up. I mean, there's undoubtedly going to be a brick wall we're going to hit. And people who don't own gold, people who aren't positioned, if they're all in paper assets, it's going to hurt. It's going to hurt terribly.
Yeah, just like 2006, 7, 8 in there, when the stock market went down 38%, gold didn't go up a lot. It went up like 6%. It's like a 45% difference. So yeah, it's definitely going to happen. And like I said, the central banks are making gold go up even when the little guy or the investor can't make a decision, feels comfortable in the equities because they had such an incredible year last year. But we know you get complacent expecting double-digit returns, and it blows up in your face. And certainly with all the talk about gold-backed currencies, central banks must believe in it, because every year for 5 straight years, they've broken records for how much gold, physical gold, they're buying in the open market and putting away for when paper no longer is reliable. And we all know they want to go to a paperless society, but they also want to go to where your investments are all in paper. So, yeah, it's just a crossroads happening. And I was telling you earlier, doing this 44 years, I've never seen as many big calls that we're getting. We talked about a client years earlier today that made a huge movement just to get a percentage he wanted in his assets, but he's a very wealthy man. So we're seeing that, Jerry, and like I said, the central banks are underpinning the price anyway. So you've got that going for you in addition to the demand of the little guy buying some insurance and doing some diversification.
Yeah, so true. You got central banks issuing lots and lots of paper, printing it out of thin air, and then, of course, they're hoarding gold. You have a national debt that's over $23 trillion. The federal spending and the deficits are out of control. You have our liabilities here in the United States outstripping our assets. By all definitions, this is not going to end well, and gold becomes that place where if you don't have some exposure, if you're not understanding what gold is, if you don't understand that you need portfolio insurance, it can really, really hurt you, just like what happened back in 2008. Certainly will happen again. There's nothing new under the sun. Well, let's turn to silver for a minute because gold has really kind of stolen the show. It's kind of stolen silver's thunder, but that tends to happen, doesn't it, Tom? Because when we look back historically, gold will have, whenever the uptrend begins in the metals, you typically get really good returns from gold. Silver sometimes lags, but then eventually silver just suddenly surges. And when silver runs, it's almost easy to be too late. You almost can't catch it if you're not in it. Silver, will 2020 be the year you think that silver really begins to compensate for its lagging behind gold, or do you think we have to wait a little longer?
Well, there's so many factors there. I'll just hit a couple of them. We've got this 90-to-1 ratio, and certainly the people that believe that 50 is the fair ratio, others 36-to-1, that gold is 36 or 50 times more valuable than silver. So you have those that play that, and certainly at 90-to-1, you're sitting there saying, can it go higher? And yes, it can. I mean, you could get to 100-to-1 ratio if silver's sitting at, at $15, and you had gold down 100 times that. You guys sitting there at 1,500. That's where we are, just about. So we could easily get that. But the key thing, Jerry, is we've got to look at the commitment of traders every Friday to see how they're doing on silver. You don't see shorts in gold hardly at all right now, and yet silver, you still see people shorting silver, which makes crazy no sense to me, because that one ratio we talked about. Then the second thing is that the Chinese car deal is going through, and by 2024, you've got to have electric car. If you have a gas guzzler, you're going to pay a penalty in China. And while there's not huge amounts of silver in there, but then you got Tesla's stock going wild. You see Tesla buying silver for their plant, to build electric cars. And then the state of Florida is just advertising for every investor. I'm talking about every day. They've got the greatest ad campaign in the history of utilities. They're showing that the whole force of energy is going to come from solar panels and batteries and silver. I mean, they're saying this is it. This is the most cost-effective, and this is where we're going. The state of California is saying you build a house over 2,400 square feet, it's got to have solar panels. So we're going to fulfill the thing like you said. The thing is, it is so frustrating to your listeners and to me when to sit there and see, knowing, because silver is so thinly traded compared to gold, and it's not money, it is still an industrial metal, and the industrial people are going to short it as long as they can, but when it moves, it's going to go from 100-to-1 ratio to 50-to-1. Right? It's not going to be gold coming down. It's going to be silver going up. So all I can tell people, you get in there, what you feel comfortable with, because we're now, Jerry, about $3 above mining cost. We did this show many times in the last 12 to 18 months when gold was down at mining cost between $13.50 and $14. Now you're up there at $17.50 on silver.
Yeah, for those who are listening who are more technically minded, technical traders, or technical investors, I'm looking at a chart right now of silver, and even though it sounds as if we're saying that silver is not moving, it actually is in an uptrend. It's above a rising 200-day moving average, and it's currently sitting right at its 50-day moving average, which is oftentimes an interesting place to add if you're a longer-term trader or just looking to add to your investment. So it's an interesting place right now for silver. Silver locked in an uptrend. We've been bullish on silver now for some time since it entered this uptrend, and everything technically looks good going forward. So silver we certainly like in the future. So two other metals that I would like to talk about, palladium and platinum. And let's start with palladium first, because palladium has been on a raging bull market, huge uptrend. We called the uptrend back in 2016 for our members. That has just been an enormous rally. And right now we have palladium topping out near $2,400. It's trading right now, according to my charts, at around $2,265. It looks very bullish on the charts, but there are some fundamentals that people might want to know about.
Well, you're exactly right, Jerry. We gave that buy signal back in the first we gave back in 2012 was $307. It's gone up 8 times, and then in 16 we've seen it triple since 16, and now it's up against the wall. But there's several things to know about palladium. Number one, its primary use is a catalytic converter, which is not silver for cars, but platinum and palladium, and they have interchanged over the years, where we saw platinum go from 300 to 2,000, and then people sold platinum to buy palladium because the car manufacturers changed, because either metal works, they just have a different melting point, so you have to change the manufacturing capabilities when you change metals. But here's the key thing. You said the word fundamentals. 85 to 90% of palladium comes from the Soviet Union in Siberia, where it's very cold, and those mines are only open usually from somewhere in late April, early May, up to about October, early November. And the rest of the time, Russia hoards that metal and pretty much controls the price of it. But when the mining starts back, and we're hearing there's a mild winter in that area, which we follow, is sometime in the next 6 or 8 weeks, we can see this metal that's topping out at 2,400 go down to 1,500 just like that. I mean, just very, very quickly. And if some car manufacturers start buying platinum instead of palladium and retooling, then there's going to be more people buying platinum in the industrial world and more people selling palladium. But, I don't hold any right now. I got out too early, but I'd rather be a few months early than a couple weeks late, because when this thing moves down, I've seen it too many times over the last 44 years, it's going to move down. And if you want to follow the weather in Siberia, follow it, and you see it warming up and falling out. If you haven't sold your palladium, you better sell it, in my opinion. But that'll lead us into platinum. But palladium, Jerry's been one of the best calls we've made on your show going back 4 years ago, and even earlier than that. So I know that people have prospered from that. We have one family that put in $512,000 that had to sell it for a death reason, but they got over $3.8 million back on it. So it was over 7 times they made on it. So we see great stories, but I just say to client, any other comments you have on palladium before we move to platinum. But I'm saying, if you're not already out, you need to be looking for an exit date or an exit reason to get out of palladium and get over into silver and platinum, whichever you feel the most comfortable.
That's so true. When I look at the chart here of palladium, I see that it could fall all the way to $1,600, Tom.
Yep.
And that's where the 200-day moving average is, and it would still technically kind of be in an uptrend at that point. But boy, you sure would lose a lot of your gains if you let it go down that far. So I think that might be prudent. I would be looking at about the $2,000 level, which is about the 50-day moving average. A breach of that to the downside could indicate that what you're saying is going to happen. So it's probably wise. You don't want to be greedy on these big uptrends. When you have something like this, when you're in doubt, just take the gain.
Amen.
Let's move on to platinum, because platinum is another metal that we've talked about on this podcast many times, and you did just a bang-up job of calling a new uptrend on platinum early. I mean, you basically said the fundamentals for platinum here are very bullish, and you began to get aggressively long on platinum, and that was back in the summer? Was it last summer in 2019?
Last summer we were sitting there at 720, and then 760 we really put out in writing, to everybody in August.
Since that time, it rose up to about $1,000. It's trading just below $1,000 now, and you expect there's more upside ahead as money comes out of palladium. I
do, Jerry. We've talked about it. Platinum is 30 to 40 times more valuable than gold, and 88% of the time over the last 30 years, platinum has been higher than gold. So to look at it and say we got a metal 980 and the other one set up for 1,566 an ounce. Right now, platinum's going to adjust back to its normal rarity because, once again, it's 30 to 40 times more rare. And you look around, and platinum has 75% of their production coming from South Africa. And, of course, we continue to see labor strikes and power outages, and this has caused cutbacks in supply. And that was one of the reasons I called the buy signal last summer. But you just got to remember, when you've got platinum a third less, 35% less than the price of gold, that's just almost unheard of over the years. So we still think you're going to have some very big up movement in platinum, and I really think we'll be talking about platinum being over 2,000 really in the next 2 or 3, 4 years, Jerry, just trying to tell you what I think. And I don't want to get into it today, but just the future of the dollar when you're looking at charts, when the dollar dives, not only it also improves the price of all metals because the dollar weakens, and there are many things showing the dollar weak, but that's not what this update's about. So we'll do it, and then just look for China and India's middle class just continues to expand, and all of a sudden platinum's become next to gold, their metal of choice. I mean, it's the exports going in over there in platinum because they love jewelry, and as they build their portfolios in gold, jewelry and things is now platinum, and platinum's just believe it or not, just the jewelry use alone is putting a big strain on the supply of platinum, primarily coming out of South Africa, as I mentioned. And also, platinum is taking over as manufacturing high-end performance glass. It just makes it so much stronger. Throw in the cell phones and the telephones and the smartphones and then now they're calling it smart glass. And I think you're going to see platinum's uses, and it's so rare. Like I said, it's the next $2,000 metal, and I don't think it's 2 to 4 years off.
Oh, you're not kidding. It is so rare, and the production just year to date is dwarfed by palladium and silver and gold, and as well as the total reserves of platinum are smaller even than palladium or gold even for that matter. Yeah. So, yeah, it really is one of the most precious metals in the world, if not the most precious metal. Tom, I know you have to run, so before you do, would you mind sharing with our folks a little bit about your work, how people can contact you, and what you do for them?
Yeah, sure. Well, being a broker, I used to be a market maker, but since 2000, we decided we know all the wholesalers. We've got a great relationship, and they know I've never not paid a bill, so when they buy more than they want, and if their bid gets hit and say they want to buy 200 bars of silver and they have to buy 700, then they'll call and say, can you sell these off at a lower premium? And I'll say, I'll take part of them. But I spend a lot of my time, Jerry. Dan and Jade and Carol do a good job of doing all the back office. But my job now out there is really buying and talking to clients. And right now, as we talked about earlier, we're getting the best deals we've ever had and passed them along. And any metal they're interested in, we'd be happy to talk to them. And they can reach us at 800-247-2812. That's 800-247-2812. And we're doing our self-directed precious metal IRA business has exploded. A lot of baby boomers are taking their 401ks and cashing out and turn them into two IRAs, one for their equities and one for their precious metals. And we can be the broker and we can be representative, but you've got to get your own custodian, but we can give you a couple that we work with. They've done a good job. So, call and get you a self-directed precious metals IRA if you don't want to buy your metals through your personal funds or you have a lot more funds in the IRA. So anyway, that's a great thing to talk. But Jerry, I just say to any listeners, and especially the ones that have been listening to us for a decade now, this is as big as you're going to get it. The demand is increasing in every aspect of precious metals. Other commodities are picking up. We don't do other commodities, but the buy signals in copper and things like that are tied to how metals move are also saying the same thing. All these metals we talked about, certainly not palladium, but the other three, we think are in a great place. And when silver breaks out, you're going to see a big movement in it.
So a quick summary here, folks. Gold, silver, and platinum. Tom is bullish on palladium. He believes we probably are near the top, if not at the top. And those are for fundamental reasons. So it's really good. If you have questions for Tom, feel free to give him a call, 800-247-2812. And if you decide to purchase any gold or silver from Tom or platinum or palladium, be sure to mention Follow the Money or my name, Jerry Robinson, and he'll throw in the free shipping and insurance on your entire order. It's a great deal. Tom, you have some of the best prices that I've ever seen. I buy my gold and silver through you because I know the price that you charge over spot is so much more competitive than anything I've seen.
Well, thank you, Jerry. We worked hard to do that. We got to make enough to make a living like everybody else, but to go and look at these telemarketers, we're marking some up 2.5%, 2%, or whatever it is. We're sitting there looking at these telemarketers, 11 to 18% over spot for the same product.
That's something.
Just makes you sick that people get stuck with that. And then they make them pay another big one when they sell it. So anyway, love to talk to anybody like to talk to us. And Jerry, once again, thanks for having me on the show. I enjoyed it.
Oh, it's great to have you on, Tom. We'll talk to you again soon. God bless.
All right. God bless you.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, friends, welcome back to the program. You're listening to Follow the Money Radio, and we just talked about precious metals with our precious metals expert, Tom Cloud, and we covered quite a bit there. So if you have any questions, I encourage you to follow up with Tom. He is very friendly on the phone if you ever want to reach out to him and ask questions. Again, his number is 800-247-2812. Be sure to mention Follow the Money, and you'll get that free shipping and insurance on any orders that you place with him. You can buy gold, silver, palladium, platinum, coins, bars, whatever you want, and he'll even educate you on what might be right for you. So if you're not really sure what you need, but you know you just want to have some exposure, just give Tom a call. and him or one of his associates would be happy to get you all set up. Also, don't forget, if you need a trusted financial advisor, we have put together our Christian Advisor Referral Service, which is completely free. We'll put you in touch with a faith-based financial advisor, someone who shares your faith, and you can reach out to get connected with somebody by going to our website, followthemoney.com/advice. And there you can request to be put in touch with a financial advisor. You know, whether you're wanting to put together a financial plan for this year, whether you're wanting to maybe inquire about, you know, a good retirement plan, wanting to boost your retirement plan. There's so many different things that our advisors can do. So if you're just, if you're just wanting to find out what we can do for you, go to followthemoney.com/advice. You can learn a lot there. And then you can also complete a free online form that allows you to be put in touch with somebody who serves your area. Well, friends, that brings us to the end of our broadcast. It's been a pleasure to be here. And as always, I'd like to leave you with a final word, this time said by President Theodore Roosevelt, the 26th President of the United States, who said this: "If you could kick the person in the pants responsible for most of your trouble, you wouldn't sit for a month." And that's just something to think about. Well, how true is that? Remember, friends, when you want the truth about the global economy, you just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of ftmdaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.